Trading versus investment, which is better? The debate between trading and investment is one that has been ongoing for decades. Both approaches have their advantages and disadvantages, and what may be better for one person may not necessarily be the same for another. In this response, I will outline the differences between trading and investment, their respective pros and cons, and finally offer my opinion on which is better. Trading refers to the act of buying and selling assets, such as stocks, currencies, and commodities, within a short time frame, usually hours, days, or weeks. Traders seek to make a profit by exploiting short-term price movements in the market. Trading requires a high degree of skill and knowledge, as well as an ability to react quickly to changing market conditions. It is often characterized by high risk, high reward, and high volatility. Investment, on the other hand, refers to the purchase of assets with the intention of holding them for an extended period, usually years or decades. Investors seek to generate returns over the long term through a combination of capital appreciation and income, such as dividends. Investment requires patience and discipline, as well as a deep understanding of the underlying fundamentals of the assets being purchased. It is often characterized by lower risk, lower reward, and lower volatility than trading. So, which is better? The answer, as with most things, is that it depends on your personal circumstances and goals. Here are some pros and cons of each approach to help you make an informed decision. Trading. Pros. Potential for high returns. Trading can be extremely lucrative if done correctly. Skilled traders can make significant profits in a short amount of time. Flexibility. Traders can adapt to changing market conditions and adjust their strategy accordingly. Variety. There are many different assets that can be traded, providing a wide range of options for traders. Cons. Lower returns. Investment typically generate lower returns than trading, as the focus is on long-term growth rather than short-term gains. Limited flexibility. Investments require a long-term commitment, and it can be difficult to exit an investment if necessary. Greater uncertainty. Investments are subject to economic and market fluctuations, which can be difficult to predict. In my opinion, both trading and investment can be effective ways to generate wealth, but they require different skill sets and mindsets. If you have a high tolerance for risk, enjoy the excitement of the markets, and are willing to put in the time and effort to learn, trading may be a good option for you. If, on the other hand, you prefer a more passive approach, are focused on long-term growth, and prioritize stability and security, investment may be a better fit. Ultimately, the best approach will depend on your personal circumstances, goals, and preferences. It's important to do your research, seek advice from professionals,